Hey guys, it's Crossroads here. Today I wanted to talk to you about SoFi and specifically its technology platform. Now, I want to go beyond just numbers. Yes, numbers for the technology platform were certainly disappointing in quarter four, showing almost no quarter over quarter growth, slowing year over year growth, and very slow guidance as well. What I wanted to do is apply some methodology to earnings calls. I've noticed a trend in the way that SoFi tends to talk about their own technology platform. It has really shifted over the last few years. I caught it finally this quarter. As you may know, I'm pursuing a PhD at this time, writing my dissertation and hoping to defend late this year. And my methodology is in rhetorical analysis. Now, basically, what rhetorical analysis does is it's very good at capturing the way that people talk about certain segments or aspects and seeing how that shifts over time. There's more to it, but that's a simplified, dumbed down version. And so I wanted to take a look at their earnings calls from quarter four 2021 all the way through the present and really see if there has truly been a way that they've shifted in talking about the platform and what that might imply as far as the way they think about that technology platform. I was surprised with my findings, but let's take a look at that. So this is the raw numbers. Don't worry, we'll have some much prettier charts. But basically, I looked at every single one of these, not using AI. I decided to just manually do it because I encountered some hallucinations when I tried to use AI. Certainly, I'm not using Palantir's product there. But found some, noise. Pipeline mentions didn't mean much. AWS didn't mean very much. But there were some mentions that certainly got my attention. And so one of those was, if we look over time, we see that Galileo and Technisys mentions have actually gone down to zero as of quarter four 2024. Now, some of this should be expected. Galileo was acquired back in 2020, and Technisys was acquired in the first quarter in 2022. And so it makes sense that they'd be talking a lot about these back near those times of the acquisition. Analysts were asking questions. That's what the all is referencing. The unprompted is when SoFi chooses to just mention it on their own. But you can see certainly the trend is clear that these are not mentioned very often at all. And also, if you look at the slide deck, although I didn't aggregate those numbers, those tend to be broken out a lot less this quarter, especially. Another shift is you can see that the mentions tend to follow the growth rate of the technology platform. And so we can see here that mentions are down. So all tech mentions is whenever SoFi themselves, not analysts, say tech platform, technology platform, they use it interchangeably, Galileo or Technisys. Whether prompted by analysts or not prompted at all, we see that the number of aggregate mentions is way, way down. And it tends to track the growth rate. Now, don't read too much in the growth rate back here because, again, these were new products. When you acquire them and all of a sudden you have that revenue on your platform, wow, look how we're growing. Don't read too much into that. Rhetorical analysis is good at pinpointing this trajectory, but not really ascertaining why this shift has occurred. But I believe that this is simply human nature, that we tend to talk about what excites us the most. And if there's an area in our life that just isn't going that well, we tend to not talk about that quite as often, and especially don't mention it as vociferously as we might otherwise. And I think that that's what's going on here is that perhaps the excitement, at least some of that initial excitement and hope as far as SoFi becoming the AWS of fintech has alleviated somewhat. Now, Anthony Noto has continued to mention SoFi as the AWS of fintech, but there's also been a shift in the way that they talk about that as well. Specifically, Anthony Noto tends to lump these together. Now, he started doing this in 2024, and he said a phrase, and he repeated it a number of times across several interviews and also earnings calls, changing a word here or there, but it seemed very, very calculated. And that phrase was, we are making progress on our journey towards becoming an AWS of not only fintech, but of financial services broadly. Now, what did this mean precisely? Well, part of the shift, I believe, is understanding that the technology platform itself really does fuel their financial services platform. So this was a slide from their earnings in quarter four 2024, from the most recent earnings that they had. And you can see this really nice graphic here where they have the financial services productivity loop. That's not something that's anything particularly new. It has somewhat, but you can see this piece right here, the technology platform itself. And they note Tech DNA drives this product innovation as well. Tech platform supports SoFi's innovation and speed to market. And so they're showcasing, like, hey, part of the reason why they acquired Technisys and Galileo was for their own in house production of financial services. And so they're using this to control their costs, own their own tech stack, and also build their products for themselves. And that fuels this financial services productivity loop. It's pretty clear that they have begun to think of these two things as one and the same. And so if we actually look at the way that they guide them itself, we can see that they didn't just guide for financial services, tech platform, and lending, and just saying all three is separate but equal, but really beginning in 2023 and especially in 2024 guidance, and we see it here in Q4 2024. This is what they're looking at over the last year. They combine these two. They do break out, thankfully, the segment itself. So you can see the light blue and I believe that's purple. But these are very much combined in their mind. And we can see that as well from the way that they mention these together. So what this graph is showing is that the technology platform or tech platform mentions, this is in blue, and then mentions of tech and financial platform as one idea. So what this removes, and I've done this manually, is when Anthony Noto and his team or Chris Lapointe and his team would basically say, hey, lending services will do this, financial services will do this, tech platform do this. That doesn't count as a linking idea. But instead, what I'm looking for is when they tend to link financial services and tech platform combined into one idea or one phrase, oftentimes using linking verbiage. And so we do see a bit of that here. This was from Q4 earnings transcript from this year. And so Anthony Noto did this twice. Our strong member and product growth powered record revenue in 2024. You can see the results there. And he says, together, it's a linking word. They see these platforms as very much together, united. Together, our financial services and technology platform segments generated $1.2 billion of revenue. You can see what they're up, that they're up quite a bit together. And then you can see, it does call it two segments. So they do kind of see it like it is two segments, but it's also very much together. And then you see here, it's safe to say SoFi is not just a lender anymore, and we continue to see significant opportunity across our financial services and technology platform segments. And time again, they continue to mention that tech platform and financial services together. This was a new idea as of Q2 2023. That has only continued in time. They didn't mention it the previous quarter, but it's pretty clear in the way that they guide and the way that they talk about their tech platform as well, that these platforms are one and the same. So what does this imply if that's the case? Well, I think that there's a couple of implications. Rhetorical analysis, again, doesn't do a good job of looking at motive. So we don't know if this is a subconscious or conscious decision that they've made. It could be both. But it's pretty clear that SoFi doesn't think of these as standalone segments any longer. The technology platform itself fuels financial services. It's part of the reason why they've had such growth there, just because they have the tech stack on the back end. But it's also clear that they're lumping the revenue together in terms of guidance, and they're doing that very intentionally. Now, somebody that's very cynical or very bearish may say that the reason why the SoFi is doing this is they're trying to hide the weakness of the technology platform. That might be partly true. It's hard to say, but either way, the technology platform itself has slowed down tremendously, while financial services itself has really improved and has continued to accelerate as well. Somebody that's less cynical may just simply say it's just because of that relation between the financial services and tech platform themselves that one fuels the other. So it makes sense to talk about these two segments as one and guide for them as one as well. Plus, they're a little bit less cyclical than the lending services itself. But what is clear is this is very different than how they talked about it in the past. Let me show you two more earnings slide decks. So this one is from Q4 2023, so a year ago. We can see that the way that they guided for this, tech platform and financial services growth of 50% or more versus 2023 levels. They were again linking these in their mind. Maybe part of the reason was simply because they weren't projecting any growth from that very cyclical lending segment. But for whatever reason, they did link these very much both in the call and also in the slide deck. But this clearly is different from the way that they talked about it in 2022. Again, before they began to link those two ideas in earnings calls, they also didn't link that on their slide deck. And so we can see here that instead of seeing financial services and tech platform on the same slide, you see lending and financial service products. You see the financial service productivity loop, which the way that it's laid out is a little bit different, but they don't mention the tech platform at all. It's not because it existed, but it just because they think of it as a little bit differently. And even when you get into their breakout numbers, they nowhere link the two together as far as their guidance. And so something has clearly shifted in the way that SoFi talks about their technology platform. And as a result, I think that the way that we talk about it should shift as well. Well, what does this mean for myself? For me, I'm not selling any SoFi stock. I'm not going bearish. I put a price target in August of this previous year of $25. And I said this was my base target. My base assumptions are that we see basically no tech platform growth. Now, I was optimistic that we would. I saw some changes in the macro that informed me, hey, there's a high chance of upside here. And then SoFi came out with dismal guidance on their technology platform, even though they are lumping it with financial services. And as a result, that base level target is probably more accurate than what I was hoping it would be, but that's still $25. Tremendous upside between now and the end of the year. Might we go higher than that? Certainly. Might it be lower than that? Of course. Nothing is guaranteed in the market, but what is clear is the way that SoFi talks about this platform has fundamentally shifted, even as the revenue growth has also shifted as well. I think it's best to think of the tech platform as basically a free call option if you're buying shares, that there's a chance of an upside, but don't count on the tech platform to really do much more than fuel that financial services growth and, of course, control costs for SoFi on the back end as well. So that's not nothing. That's not a bad thing at all, but it's just something to think about that's a little bit different than perhaps we've talked about SoFi. And as a result of SoFi shift, I'm going to think of the company as having two segments rather than three. And if we see some growth out of the tech platform, that's great. Now, does this mean, lastly, that SoFi is just a bank? Well, if you remember, before SoFi acquired Galileo and Technisys, before it had its banking charter, it was a lender, primarily on the student loan side. It doesn't make much sense to have a lender that acquires a banking charter and tech platform be valued at less just on the basis of tangible book value, simply because that's how you value banks. That doesn't make sense at all. SoFi is a fintech company, but that's just how I've shifted my thinking as far as SoFi's technology platform. Now lumping it in with financial services, I think is a prudent thing to do so. And just don't count on that individual segment for phenomenal growth in the future. If it was central to my thesis, I'd be concerned, but it really never has been. It's just been a nice little added extra. Let me know what you think in the comments. Does this shift the way that you think about SoFi for yourself? Are you concerned about the way that SoFi has talked about their financial services and tech platform? Let me know in the comments. As always, thank you for watching, commenting, and subscribing. For now, happy investing.